Well, there's a world of hurt coming, Teen.
That sounds awful, Norm.
It really does.
But in the meantime, we are Tina and Norm. And if you haven't already subscribed to our channel, we would love you to. We'd love you to subscribe, give us a like, and give us a thumbs up. Because it costs you nothing, but it really helps Tina and Norm's channel to grow.
So here we are at the trailer. We're having time away from the apartment, having a couple of weeks here, been exploring around Bruce County, Bruce Peninsula. We've been over to Owen Sound, went to Hanover, had great days out.
It was lovely, wasn't it?
A few picnics.
Yeah.
So we're seeing interest rates rising. The Bank of Canada last week increased its rate. It's now at 5%. The Federal Reserve looks as though they're going to increase the rate again. And they're going to be around 5.25 to 5.5 by the time they're done. Both banks in Canada and the US are trying to bring inflation down by increasing interest rates.
So I think, Norm, that is going to have a devastating effect on people. I think what we're going to see is that people are going to start losing their homes because they're not going to be able to pay the increase on mortgages when they come up for renewal.
So the fact in Canada, we have seen ultra low mortgage rates for 10 years. So people have bought more house than they really need because money was cheap. Now loans are being renegotiated as they expire. The longest period you get is 5 years. So as these mortgages come up for renewal, people are realizing the banks are not valuing their house at the levels where these people bought them. So because of that, we've seen something called trailernomics, which is a forerunner of what's to happen.
And this has really surprised us because all of a sudden there is way, way more trailers for sale in our park alone without even looking at other parks.
We've never seen it like this before.
So either what people are doing is they are reacting to what's happening to their home and deciding that they can't have everything. One payment has to go, so the trailer has to go. But it has really surprised us, hasn't it, Norm, to how many are actually up for sale?
It really has, because people have just been buying a payment. They haven't been looking at the value of the products. So while money was cheap, lines of credits on your house, you're accessing the equity in your house, so it's cheap money for you. Having swimming pools, having recreational property, new car, new boat. They can't do it all, not when rates start rising and you suddenly realize that your house could be under threat.
Yeah, that's not good, is it?
Not at all.
But what is also happening that we've noticed is, with all this going on the interest rates, being a retired couple, we're not getting any increases on our high interest savings accounts.
Yeah, the banks are being really stingy. They're keeping all that additional interest rates as profit.
Mm-hmm.
So, for instance, we have 2 high-interest savings accounts because we do want to keep money in cash.
Yeah.
We're not going to invest it all in some wacky stock.
Yeah.
So, one of the high-interest rate companies, EQ Bank, they did increase their rate by 0.5% in the last few months. So it's now 3%. But we have another high-interest savings account. We opened it at 2.5 last fall, and it's still 2.5. GIC rates are coming down. So the savers amongst you, the investors, and the retired savers are being squeezed. And we've never seen this before, because when our parents were retired, mortgage rates were routinely 12-15%, And they were getting 8 and 10% on their savings accounts in cash.
That would be a really nice thing for that to happen, wouldn't it, Norm? But I don't see that happening for the near future. I think that's going to take quite a while. And also another thing too is that with people having to come out of the housing market, that's now creating another problem, and that's all these people are now going into the renting of properties too.
And we would say there's an absolute crisis in the rental market now. You all know that we rent our apartment. We are in a rent-controlled apartment, which is very unusual for most people. We're seeing in Australia, the UK, America, and Canada enormous rates of increases in rents, 20 to 50%. And when you think about it, how could you possibly afford that when your wages haven't gone up?
And I think we've just been reading recently that, particularly in Toronto, where we'll say a lot of the people that look after people that are traveling, so the people who work in the hotel industry, sort of the chambermaids and
all the minimum wage workers,
they're finding that there is nothing for them to be able to rent at the wage that they're getting. So we're not really sure what the answer to this is.
Well, we have a top tip for all those coming up to retirement and all those who are in retirement. Think twice about borrowing money and buying that next luxury SUV or extravagant purchase. We're satisfied with the car that we have. It's coming up to 4 years that we've had it.
And still,
we paid $17,000 for it. We've had no major repairs on it, just oil changes. And to be honest with you, living modestly and frugally has its benefits because we can sleep at night. Whereas if you're juggling the lines of credit on your house that you've been borrowing to make repairs, that introduces some element of danger into retirement.
Yeah, and that big word of stress, isn't it?
Who wants stress in retirement?
You don't want stress and you don't want debt, do you? No.
So if you're looking for more interest on your money, the only option would be is to go into the investment market and maybe look at an ETF that shadows the S&P 500 and leave it at that. You might get some dividends coming in from it, and it will at least keep up with inflation, whereas the money in our bank account...
It really isn't, is it?
It isn't, so we're actually losing money, but we do want the security of having cash on hand. So if you felt that this video was helpful, or even if it was boring, we would appreciate, once again, if you would consider subscribing. It encourages us so much to make more videos like this.
It does, and we do really appreciate everybody.
Each and every one of you.
Yeah, everybody who has subscribed and everybody who hopefully will subscribe to us in the future.
And why don't you leave a comment in the comment section below this video and let us know how increasing bank rates and what's it doing to your portfolios and your lifestyle. We'd be interested to hear.
So we hope that everybody is keeping well.
And stay safe.
Until the next time.
Bye-bye.
Bye-bye.